That is big. Welcome. Welcome to TTG Mastermind's first ever live stream. As we try and get the size of this correctly. There we go. Let's turn on the graphics here that we created. Boom. Look at that. That is kind of official right now, actually. So if you're just here from the True Trading Group live stream that just ended, welcome. I assume all of you are going to be, since this is brand new. This is kind of our test run of a live stream, our first ever. So all the cool information that you get from the True Trading Group live stream specified towards entrepreneurship without any of the sales. It's amazing. See Mike backstage rolling his eyes. There he goes. All right. Let's see. So what we're going to do on this stream today is we're going to go over some pretty important topics about entrepreneurship. And for those of you that are wondering right now what TTG Mastermind is, allow me to explain. TTG Mastermind is for anyone that has their own business, wants to start their own business, is looking to develop their business and professional ideas, and or anyone that is looking to be empowered and supported from where they are right now to where they envision themselves. That is the purpose of TTG Mastermind. That is what we will be doing here today. TTG Mastermind, this is just the beginning. This is just the beginning of TTG Mastermind, literally the first live stream. And I'm sure we'll have fun in a year and look back on this and see where we've come from. So I got a couple of really awesome guests lined up for you guys. But first, I feel like it would be a giant disservice if I didn't bring on and run with Mike as my first guest. He's been my business partner for well over a decade. Someone that I have truly next to my wife is the closest person that I have, and he and I have built several businesses together. We have become millionaires together. And I would like to bring him on first. And then tomorrow I'm going to do another stream in the afternoon after TTG stream. I don't know if I'm going to do this every day yet, but I'm going to do it then. And I have the owners of Benzinga coming on to talk about, what it's like to get bought out for $300 million. What's it like to, to run a larger website, so on and so forth, and the struggles and everything that comes in between and work ethic. But today, what we're doing today is a little bit different than, than what we would get to do on the True Trading Group YouTube channel. We're going to have an in-depth conversation about what is actually needed or put together a real game plan. Or at least wrap your head around the idea of what it would take to quit your job and trade full time. This is where we're going to start right here. Okay? So what I'd like to do is bring on Mike. And again, we'll see how this goes. We'll have a fancy intro eventually. We'll have more of a script. But sometimes you just got to dive in and get going. I remember Mike's first live stream. It wasn't like anything that we did here. So there we go. What's up, man?
What's up? Glad to be here, man. Very exciting. The very first TTG Mastermind live stream. I'm excited to, for this channel and the community being built. And it's very exciting for TTG Mastermind members and everyone that's interested. It's going to be a lot of fun, man. I'm happy to be here.
Nice. So what I want to talk to you about today is, first of all, let me ask you, let me step back for a second. Where did you go to, you went to college, obviously, right? Where did you go to school?
The college in New Jersey, TCNJ.
Was it your intention to start your own business out of college?
No.
What was your intention?
Work on Wall Street.
Okay, so to have a job.
Yes, to have a job.
Okay. So your intention is to have a job, and you got that job, right? When you graduated school.
I did.
All right, tell me a little bit about that. What was the name of the fund that you worked at?
It was T3 Alpha Fund. I applied to probably, 25 different hedge funds, maybe. When I first graduated, I only heard back from a handful of them. Only got interviews, even less. And it was a trying process where it was, a lot of disappointment when I didn't hear back from a lot of the firms that I really wanted to work for. The fund I ended up working for was not one that was at like the top of my list. It wasn't a very large fund. And when I say large, I'm talking, a large hedge fund controls many billions with a B dollars. This fund was less than $1 billion. It was just around half of $1 billion. So that's a small fund. But needless to say, I went through the interview process. I nailed it during the interview process. I really vibed with the guy interviewing me because he was also a baseball player. So was I. So we immediately hit it off. And I did well during the interview and the questions that they asked, and I ended up getting the job. And then I had to work my ass off because there were other people that got hired and we had to go through a training program before they actually, kept us on. So it was like they hired around 20 something people. And then based on your performance during your educational trial, which was like a 3-month program, and how you did during that time frame, determined if they kept you on or not, and then how much money that you were actually able to control.
So let me ask you a question real quick. Do you hear a little bit of an echo? No, it's gone now. Did you know anybody in school? And I know the answer to this question is yes. But did you know anyone when you were in college, when you were in high school, that kind of set out right away to start their own business?
Yes.
Okay. I think one of your oldest childhood friends did that.
Yes.
Correct?
Yes.
Okay. You guys from the same neighborhood?
Yeah.
You guys like the same stuff?
Yes.
Similar upbringing?
Yes.
Well, why did that person go out to do that? And your path originally was that of trying to work for somebody else?
That person didn't think that they were good enough to get a high-end job, and decided, pretty early that, college and wasn't for them, and decided that they were just gonna, just kind of bet on themselves because they didn't think that anybody else would bet on them.
It's kind of a funny thought, right? That you're not good enough for a high-paying job, but you're good enough to bet on yourself.
Yeah, I think it's almost like no one else believes in you but yourself, and you believe in yourself, and then you prove everybody else that didn't give you a chance, you prove them wrong.
Right. I feel like that person grew up to be a lot more successful than any job that person could have had.
1000%.
Yeah. And I feel like you also grew up to become a lot more successful than the job that you had.
Yeah.
When, what was one of the reasons that you ended up leaving the fund that you were at?
After 08-09, the structure changed. During 08-09, the crash, 50% of all hedge funds went out of business. And it was became more of a prop trading firm.
Right. All right. And that's not what you were into.
No.
Why not?
I don't, at the time, it wasn't what I was looking for. I mean, now it's different, but, I just wasn't really what I was looking for. It was, you have to, you were no longer, you didn't have any type of stability.
Okay. So you didn't have any type of stability. And then what did you do right after you left the firm?
Well, I continued just kind of trading for myself. But then I ended up getting linked up with actually the friend of mine that was already kind of doing his own thing, and a couple of other buddies of mine from college or from high school were also kind of working with him. And I was like, all right, well, I'll just, I'll give that a shot, and then I'll continue to just trade on my own, and I'll just trade for myself while I go through that and see where that leads.
All right. And how old are you at this time?
My mid-20s, I guess I would probably say, early to mid-20s.
Yeah. So you started to work at your buddy's company with a lot of, with several other friends from college and whatnot. But then again, you're still working for others at this point.
Yeah.
You have a little bit of a piece. You're probably making some good money at this place. You're also trading on your own, but it's still not yours.
Right.
Right? Still not yours. And then, look, I'm sure at any given point, you could have just said, hey, I'm done chasing the job and traded full time without anything else. But I mean, most people that trade full time also have other things that they do.
Yeah. Why? I mean, that's the whole, you dictate your own time at that point. You have extra time, and you're the ultimate entrepreneur. You should be doing other things.
Right. So it's like, I've heard people say sometimes, well, all I want to be is a full-time trader. So what does that mean? If you make $1 million trading full-time, you don't want to buy real estate?
Right. Exactly.
If you make a bunch of money trading, you don't want to invest it into a business. You don't want to, I mean, what are you talking about?
Right.
And it's just, and I get it. What people are really saying when they say that isn't that they don't want to do those things or think about those things. They're saying, I don't believe that I can do those things. I don't believe that those things are for me. I'm not even sure that what I'm doing right now is for me. So let me figure that part out. But the thing is that if you don't show up, then nothing happens.
That's right.
The whole idea behind being successful, let me give you a little bit of a secret. Showing up and figuring it out is like 80% of all of it.
Mm-hmm. I think it's Wayne Gretzky, whose very famous quote says, "You miss 100% of the shots you don't take."
That is true. But I mean, how many times have you come to me over the years that we've worked together telling me this problem, that problem, everything else, and I'm like, we're going to figure it out.
All the time?
Have we ever not figured it out?
Nah, we always have.
Right.
We always have.
So, and it's been a little while now, so I think that's probably a safe bet,
Yeah, I'd say so.
So I know you hate talking about your past openly because you are now the great Michael Edward and Michael Perinati is dead.
No, I don't mind.
No. Hang on one second. Got it. So walk me through what happened when you were at your buddy's company, right?
Yeah, it turns out that one of the guys that had really taken over and was.
Well, you're skipping way too far ahead. What did you do there?
Oh, they were in investor relations.
What did you specifically do there for them?
So what I was doing for them was my job was to talk with, negotiate with, different newsletter owners to send out and to cover the client companies that we had as a promotion firm, as an investor relations firm. And it was my job to kind of organize and negotiate pricing for those different placements.
Mm-hmm. How often did you get hit up by people looking to get work?
Every day.
Obnoxiously.
Every day.
You remember a person by the name of Kyle Sipes?
I sure do.
How many times did Kyle Sipes hit you up for work?
I don't know, multiple times a week.
Yeah? And you always said no.
And I said no.
Understood. So we'll come back to that in a minute. But so this is your job. You're doing it. You're good at it. There's a huge demand. You got people calling you for work. You're trading on your own. You're doing well with that also. You know, I remember that white M6. Was it a white M6?
Yeah.
A white M6 that you had?
Yep.
That you loved. It was an awesome car.
It was an awesome
I remember seeing that car for the first time, and at the time, I had a Jetta.
Nice.
You know, at the time, and I remember seeing that, like, man, this is cool. You know, these guys are like my age. They use the word bud a lot, and you know, for someone like me who had no business, you know, waking up several years previous, let alone being where I was professionally, it was a very cool experience to see that, because I didn't know that it was possible.
Yeah.
And it wasn't just you; it was everyone else that worked there.
Yeah. The other guy.
You know, everyone. You know, you go into this office. It was right. It was that the Hudson? It's not the Hudson, is it?
The Hudson River. Yeah.
It is. It was right on the Hudson River. It had big windows. You know,
the whole office wall was just a view of Manhattan.
Right. It was very neat. Everyone had a nice car. Everyone seemed like they were just doing nothing but thriving. I mean, it was a very cool thing on the surface. On the surface, it was a very cool thing. But looks can also be very deceiving.
Yeah.
You know, looks can also be very deceiving. And, you know, I guess towards a certain point, that company, correct me if I'm wrong, that company decided it would be monetarily more beneficial to build their own newsletters from within than to hire out to everybody else, so they could keep more of the money.
Yep. Wanted to build our own assets internally, so we had
nothing wrong
hiring
with
other people less.
Yeah, nothing wrong with that. Smart move. Speaking of smart moves, someone from Miami at the time, who was working with a guy named Kyle Sipes, who called you every single week, multiple times per week, literally begging you for work. Begging. And you shut the door in his face every single time.
Not like in a rude way. I just didn't have anything.
You shot him down. You shot him down every single time. You wouldn't even give him $1,000 budget, and you were doling out 6-figure budgets a week. Right? It's true. It's true. So then I had an idea, right? I'm the guy from Miami who was partners with Kyle. So my job when I was working with Kyle was that I ran all the back end stuff of our business, and we were just a newsletter at that time trying to build, you know, an investor relations firm. And we go ahead and we, you know, we hit up Mike and everyone else for work, and it's very hard to get work. And what ends up happening is that I told Kyle, what everyone wants in this business is leads and data. Everyone in Mike's position pays tens of thousands of dollars for email addresses, phone numbers, you know, to be able to drive traffic and convert these people into signing up. Just so happens I was very good at this. So I went home and I bought a site on GoDaddy, or bought a domain on GoDaddy called iTrader Leads, put together a website, and got a list of all the people in that industry, right? Not the traders, but the people in that industry. And I email blasted them out and said, "You're looking for data? I got data." One of the guys that worked in Mike's office called me, and it was so crazy because after trying to get a deal from this firm for however long, for $1,000, within 10 minutes of sending the email, the other person that worked in Mike's office sent us $1,000 PayPal to test out the data that we had. And I remember that Kyle was floored. He didn't understand it. At this point, nobody knew that Kyle was my business partner. I was just the data guy. They told me to come up to New Jersey. I went to New Jersey. I became
it was like 4 degrees out.
Yep. I became buddies with people in the office. I started coming back more and more often. I would work with Mike and show him how to build his own internal assets. And then one day, Mike and the guys in the office were like, "Hey, you're doing such a good job. Wouldn't it be great if you had your own list? If you had your own stuff?" I'm like, "Oh my gosh, no, guys, no, I don't think that's okay." And that's how we got a foot in the door. All right, that is how Mike and I met. Mike and I became very close over that, over, I don't know, the course of like a year.
Yeah.
We were in our early 20s. I'd work with Mike on how to, do certain things or whatever. Anyways, so what happens is, go ahead. Now that we're all caught up, what happens at the firm?
Then the guy that was really at the top, that was in charge of daily operations, ends up getting in trouble with the SEC. Did a bunch of stuff that he wasn't supposed to be doing, and that was a death sentence for the firm. You in that business, once the SEC is on your butt, and word gets out that you've done something wrong, you've had some type of violation, then all of your clients will disappear. And it turns out he was trying to cut corners and make a quick buck and got caught. And that was, even though it was an action by one person, that one person was at the top of this firm. And that just put a horrible name on everything. And he decided he was going to run away and just close down the business. And it was a death sentence for the business. So, but at that time, now I'm sitting there saying, well, I didn't do anything wrong, so there's nothing that I have to worry about. And I still have all of these relationships and all of these clients. And then I have the relationship that I started building with Adam, working, together for as long as we were. It got to the point where Adam and I were basically talking every other day, if not every day, about one thing or another. And I decided that I would just continue to do what I was doing for the clients that we had. And I started working closely with Adam and at the time his partner Kyle to facilitate, the services that the clients were looking for. And Adam and Kyle were kind of running that. And that's how Adam and I started to grow our business relationship together.
Mm-hmm. Yeah, I said essentially what happened, and it was a very technical tip. I remember saying to Mike, "What are you going to do? What are you going to do now?" And he said, "I don't know. I didn't do anything wrong." Right. And then I said, he goes, "I think you asked me what I was going to do." Right? Like after, and I was like, "Yeah, I'm going to keep building out what I'm building out. I had, wanted to do this the whole time." And I said to Mike, I said, "Hey, why don't you come with us?" And he did. And I forget what year this was, but
yeah,
you know what? It was, I think it was right around 2008. 2010 or 2011.
It definitely wasn't 2010.
Then it was 2011, perhaps.
Yeah, or maybe 12.
Right. I think it was the back end of 2011. Right. Right around there. And what ends up happening is, what is it? 11, 12, 13. Within 4 years of partnering up together, Mike and I became multimillionaires within 4 years of partnering up together. Mike, were you a millionaire before we started working together?
No.
Me neither. We had grown that business into something pretty big. All right, into something pretty big. And it was kind of a wild ride, the whole thing.
Yeah.
You know, kind of a wild ride, the whole thing. You know, I've talked about many times, you know, how we got into True Trading Group, but, you know, there was a lot of business beforehand. There was, you know, there was marijuanastocks.com.
Mm-hmm.
You know, Mike and I, you know, this was earlier. So yeah, this was definitely like 2013, right?
Yeah, because 2014 is when.
Right, was the big year. So 2013, I had been stalking this guy on the internet to try and buy the domain name marijuanastocks.com, because at the time the marijuana sector was really heating up. And the guy finally got back. I don't even know this guy's name. To this day, I don't know the guy's name. He just called himself Roots.
Roots.
You know? And you know, Mike, because he was trading at the time, had more money than I did in my account. You know, I didn't know how to trade. And, you know, I finally got a hold of this guy, and he said that he would sell us the domain name, the social media, and an existing email list for $75,000. He wasn't going to do a payment plan. You know, he wasn't going to do a payment plan. He just wanted the money up front. He wanted to be done. And I remember going to Mike and saying, listen, I don't know if you have this, but if you have it, put it up and we will make millions of dollars.
It is literally what he said to me, guys.
That is the verbatim line that I said.
Literally said, Mike, trust me, do this 75,000 and I will turn it into millions. It's literally what he said to me. I said, that sounds like a good idea to me. that sounds good to me. Let's go. Send the wire.
So we got the domain name, and from the end of 2013 to the beginning of 2017, right?
Yeah.
Right around there?
I think 2016, 14 to 16 was when
14 to 16. That website generated over $10 million.
Yep.
And Mike and I became multimillionaires. And then the other business started to grow and so on and so forth. But really, that is what propelled it. You know, that is what propelled it. Since then, we have had, Mike and I together have had several businesses. I had one business before Mike. Total, the 3 businesses that I've run, including True Trading Group, the IR firm, everything else, have generated since 2014, generated close to $100 million in revenue combined. I didn't go to college. I don't have a fancy background. You know, I took a bet on myself. And that is what I want to talk about here today. And I, you know, we spent the last 30 minutes, feels like we've been talking for longer, but it's only been 30 minutes, going over this because I want people to understand what it means to bet on yourself, because that is the first thing you have to be willing to do. It's not a matter of willing, you know, when you want to quit your job and trade full time, it's not a matter of, you know, wanting, you know, be willing to learn technicals, be willing to have a different mindset. You have to be willing, completely willing to bet on yourself. Because if you're not, you're going to fail.
Sure.
So we say all that to say this. What made you finally go out on your own? What made you bet on, I mean, I know it's not a full-time trader, but what made you, but it doesn't matter because that action is the same. You know, that action of betting on yourself is the same. What made you go ahead and do that?
You're asking me?
Yeah. What made you decide I'm not going to go look for another job at a hedge fund? I'm not going to go see who else is hiring.
Yeah, you know, for me, it was a couple of things. For me, you know, I always had the trading aspect, right? So I always kind of had that, you know, and working at that firm with the other guys too. It like was also a lot of fun. It was a lot of fun to be working with your friends. It was a lot of fun to not really have somebody else that you have to answer to. And I got very spoiled. You know, I got very spoiled to realizing what unlimited potential looks like and what, you know, controlling my own schedule looked like, you know, between, you know, the money that I would be making with the firm and the money that I was making trading. And I didn't necessarily have like, oh, you got to be here at this time. You got to leave at this time. You got to do that. Like, it wasn't like that. You know, it was very much, I got a taste of entrepreneurship. And, you know, when I worked at the fund, I didn't realize at the time how much I hated it because it was like I was living the dream, right? I was working on Wall Street. It was, you know, it was for some reason I thought it was fun to like wake up at 6 o'clock in the morning and take 3 different trains to get to Wall Street. You know, that sucked. You know, after not doing that for several years, I'm like, do I really want to wake up at the ass crack of dawn again and then get on 2 trains or 3 different trains that smell like piss and go down to New York City and have to, you know, work for somebody else? I didn't want to do that again. And I just didn't want to do it again. And I decided that, you know, I'm going to give this a shot, you know, and I'm going to give this a go and I'm going to bet on myself. And I'm not going to look for another job. I'm going to look to build myself and build my life the way that I think it deserves to be lived. And once I got a taste of entrepreneurship, I never wanted to eat anything else for the rest of my life.
Do you think it was easier to do at the time because you did not have wife or kid or?
Yes.
Yeah.
So that's actually the reason why the other guy didn't come with me.
I know.
Yep. That's why he didn't come with me. And he regrets it every day of his life.
Yeah. He's a good dude.
He's an amazing dude.
Yeah.
I'm still very close with him.
But I get it. You know, yeah. I get it. Even myself now with a wife and kids, you don't want to be too risk averse, but at the same time, you have to sit back and think about things a little bit more clearly. You can't be afraid of taking the chance, but you can't afford to take things like haphazardly either.
Right.
It's a very fine balance between being willing to take a risk and risking it all for something that doesn't make a lot of sense.
You gotta be very honest with yourself, man.
That's part of what we went over with TTG Mastermind members. That was part of like the foundational workshops and courses that we did was really to get an honest sense of what is possible for you. And the only way to know that is to get real honest, is to have a solid understanding and to practice self-honesty. I told TTG Mastermind members, I'm like, look, I don't care if you want to lie to everybody else. Go ahead, look them right in the face and lie.
Lie to every client, lie to every competitor, lie to
everybody you want. That's you. That's between you and the universe, right? The danger becomes when you start lying to yourself.
Yep.
When you start justifying your own garbage and you start believing your own garbage, that's where the problem comes in.
Yep.
Because you will take that false narrative and you will 100% screw yourself over with it.
You'll make yourself believe it's true.
Yeah, of course. So, there's a lot of people that want to, quit their job and trade full time, right? So many reasons why you want to do this. Everything you just said.
Yeah.
You don't need a brick and mortar store, so you don't need to open your own, your own shop. You don't need to build a website. You don't need to have a product to sell on Amazon. You don't need to provide a service. It's you, a computer, and understanding what's happening in the market. It is quite literally, in my opinion, the lowest barrier to entry to start your own business. We've started many a business, and there's very few businesses out there, very few, where you're going to be able to start that business for a couple $1,000 and a computer. It is actually mind-blowing when you think of it. When you really sit down and think about it for a second, it gets lost in translation sometimes on the True Trading Group channel, because, that channel we use a lot for selling and marketing. But it gets lost in translation sometimes, man, when you say, type the number 1 if whatever it is, if you're a full-time trader, right?
Yeah.
And it's easy to just count the number ones and not think what actually goes into that, or what courage goes into that, or how much those people started with. When you say, how much did you start with, and somebody says, I started with $1,000 and now I'm trading full time. I mean,
it's incredible.
No, but the point is that you can't name me another industry where you start with, let's just call it $5,000 or under. There's a tremendous amount of people in True Trading Group that have their own business, that have invested tens and hundreds of thousands of dollars into their business,
Yeah.
But you can't find me a business outside of the stock market where you can take 5,000 or less, and within a relatively short period of time, whether it's 12 months, 18 months, 24 months, whatever it is, have a business that allows you to make more than you were at your day job. It is an amazing starting point, right? Because if you're able to do that, then you're able to take some of that money and parlay it into other things. And that is how you build wealth. That is how you diversify. The wealthiest people, the top of the 1% of wealth is diversified.
Seven sources of income.
Correct. Now, unless you have the money and time to go to college or university, get some crazy degree, intern, get a big job somewhere, work your way up the corporate ladder, and then use that money to diversify. You could also look at the counter thing, which was what Shai was saying. 2 years of trading, military veteran, making more than she would have at her, at her previous day job, bet on herself, and has retired herself 2 years after learning how to trade.
Yeah.
No formal training. This is not her specialty, yet she's able to do it. Jessica, similar story. Crazy schedule, has a business with her husband, but needed to do something on her own as well to like supplement some of that income. Was able to do it here. And not just do it here, but be extremely successful to the point where there's this constant, it's not even a joke, it's it's real life that she's retiring her husband.
Yeah. And has three kids too, right? 3.
I think she's got
4?
Yeah. No, not 4. It is, and I get it. There are some businesses where you can start it for, for less than $5,000 or whatever. Like if somebody said I opened a barber shop under 5,000, but had to close due to COVID. Yeah, I mean, I guess if you have some clippers and you're going around and cutting hair, then yes, stuff like that's your own business. But it's kind of capped because you're one person. So in order to grow a business like that, where it's you providing a service to someone directly in exchange for compensation, you have a finite amount of people's hair that you can cut in a day. There are close to not infinite, but infinitely more ways, strategies, opportunities to make money in the stock market on a daily basis for the same, if not less money. In my opinion, the stock market is really a great starting point for people, especially now. Because it's the quickest way, like if you have a bigger goal, right? So in Mastermind, people have bigger goals. We have a member that's creating an educational site to help parents further their kids' education. And this person is an educator and a medical professional, and wanted to make money trading in order to pay for it. That's the idea. Whether you become a full-time trader, whether you want to start your own business, it's a wonderful thing to be able to use the stock market to get there, because it is the lowest hanging fruit. So what would you say the average, I mean, we can check on this too. This is one of those things I'll be a little bit more prepared on next time, but what would you say the average salary in the United States is? Guys, do me a favor.
$54,000 a year.
Is that what it is?
It's in the mid 50s.
Let me see. Yeah, so 56,000 as of September 2021, right? So let's figure. So let's call it 56 grand. All right.
Probably a little higher. If that was 2021, it's probably maybe like 57 or 58 now.
Let's call it 60. Let's say the average salary is $60,000 right now in the United States, right? Okay. So the average salary. Oh, there you go, Joe. Thank you. Coming in hot. I guess I got to read all this. All right. So is this per week? Yeah, it's about 50, let's call it 60 grand. Let me share my screen.
You should make the font bigger.
Oh, thank you.
Just letting you know.
What?
Just letting you know. I don't know.
No. I know. Just typing. All right, becoming a full-time trader by the numbers. All right. That's probably too big. All right. So, average salary. $60,000 a year, right?
Mm-hmm.
Kathleen Duke. Oh, okay. Kathleen Duke keeps saying down. 55, 53. After taxes won't be much. What is that after taxes, Mike? Well, and let's bring it down. Most people are saying 53, 55. Fine. Let's meet in the middle. Let's even call it. Say it's lower. Let's say it's 50 grand. All right. What is the taxes on that, more or less?
I mean, really, that depends on what state you live in. But
no, but just like, what's the federal tax rate?
I don't know what the bracket is for a 50K salary. Maybe high 20s. I don't know what the tax bracket is for a 50K salary.
Hang on, I'll tell you right now. If you make $50,000 a year living in the region of, let's just use Florida as an example, you will be taxed $8,066. So your marginal tax rate is 20.2%. All right. So we'll use Florida as the example.
Yeah, and there's no state income tax, so your take home is 40K.
Right. I'll put this up here.
42K.
All right. So there you go. That's if you live in Florida. I live in Florida. We'll just do it by that. Okay. Let's break this down. Take out a calculator real quick.
Okay.
How much? One sec. How much money? What is 50,000 divided by how many trading days in a year? Let's see.
So that turns out, in order for you to make 42, you want to do 50,000?
Yeah, you got to pay taxes on it.
Right. You got to make $200 a day.
Out of how many trading days?
252.
Okay. So let's do this. What did you say? How much?
It's a little bit less than $200 a day. It's like $198.50 a day.
No, let's call it 200 a day.
Yeah.
Okay. Based on 252 trading days in a year, right?
Mm-hmm.
Make this a little bit smaller.
That's a little too small.
No, I'm gonna zoom in.
Oh, sorry.
I just want to be able to move down.
Yeah.
Right?
Yeah.
Okay. So with that said, you have to do $200 a day. Now that's on average, right? So
right. You're going to have red days, obviously. Right?
Of course.
That's assuming you're green $200 every day, which is not possible.
Of course not. So let's talk about risk for a second,
mm-hmm.
right?
Mm-hmm.
A moment. Talk about risk for a second. If you to start off at this point, well, let's back up for a second. So assuming that you're working your $50,000 a year job, you're not going to be with your back against the wall here, or you should not be, right? If you still have a job and your goal is to transition out of that job, then you should not have your back against the wall here, right? You should have some income coming in, and this should allow you to take some of that income and then start to now work your way out of it, right? Based on that, let's see, in order to begin, not transition, but in order to begin to what is your professional opinion here? I'm starting in the market. I have a $50,000 a year job. My goal, $200 per day average at the end of 252 trading days in a year. I want to transition out of my 9 to 5. Transition being the key word, not just quit and leave, but transition intelligently, right? What would you say is the amount that I should start with in a trading account?
A couple $1,000.
Like $2,000?
Yeah, think of it this way. I would say to start off trading options. And
well, hang on, we didn't even get that far yet. I'm just talking about what is the money that I should put aside to start with. Your answer, $2,000.
Yeah.
Okay. Now, what is your risk? So if you start to trade, you have a $2,000 account, you know you're going to have red days. How does risk play into this?
On a $2,000 account, I would say that your risk should be $50 to $75 a trade.
All right. Now, based on that, walk me through what the evolution of that looks like if I'm risking $50 to $75 per trade.
Yeah.
Right?
Yeah.
What would my average, what would my win rate have to be? What would, how would I know, so I have the account size we're going to start with. We have what I plan to risk per trade. And then now what?
Now, because the idea is always that you're always going to start much lower than where you need to be in order to get to your goal if you want to make $50,000 a year, right? You're not going to make $50,000 a year if you just risk $50 a trade for the whole entire year. Your win rate would have to be too high. Your wins won't be big enough to cover the red days to get you to 50K. The idea is that you start small, grow that balance. So now the 2K balance turns into 3K, right? And then eventually you'll start to increase your risk. Instead of $50 to $75 risk, then your risk becomes $60 to $90. Then it's $75 to $100. Then it's $125, right? Like you're going to start moving and growing that account and increasing your risk as you become consistently profitable, so that you get to the point where you're risking, $150, $200 per trade.
When would that be what you should do? So
Okay.
if I'm starting, so for example, let me actually go. Let me see.
I got you. I know. So I'll keep going.
So well, hang on. I wanna just bear with me for a second.
And whatever the dollar amount is, I know we just talked about, hey, putting 2K aside. Whatever the dollar amount is that you put aside, it has to be a dollar amount that if you lost all of it, you're perfectly okay. So whatever the number is, you gotta be comfortable risking all of it.
Got it. So does that mean that if I only have 2,000 to lose, should I start with 1,000, even if it takes me, instead of a year, it takes me 18 months? But at least then I have a second shot at it.
No, I think now you're getting a little too detailed. Whatever that dollar amount, what I'm saying is essentially, like, listen, if you lost $10,000, if you would be financially in trouble, then you can't start with $10,000. Right?
Oh,
it has to be a number that if you lost all of it, your life doesn't change, your financial situation doesn't change, your ability to pay your bills doesn't change, nothing changes. You just, damn, I lost it. It has to be a number that you're okay losing.
Got it. So if we start with $2,000, I'm going to risk 50 to 75. What happens when I get to $3,000 in that account? What am I risking?
Then I would say you start risking, $60 to $90.
Now I'm at 4,000.
I would say, 75 to 100.
5,000.
Now you're, 100 to 125.
All right. So basically this is going up in $25 increments.
Because what I usually will have people do, and when it's this small of a number, right? When your account when you're talking about $50, $75, what I have members do, once you become profitable, and you want to be profitable for at least a few months consistently before you decide it's time to increase your risk. I would say be consistent for like 3 months, at least 2 months minimum. Okay. So like be consistently profitable for 2 months minimum, and then say, okay, I'm ready to increase my position size. When you're ready to increase your position size, do it by about 25%. So to make the math easy, let's say you were risking $100 a trade. When you say, hey, Mike, I've been trading really well. I'm consistent for the last 2 to 3 months. I feel good. I'm confident. I want to increase my size. Okay, perfect. Go from risking $100 to start risking $125. And when you make that 25% increment jump, stay there for a minimum of 2 weeks. Make sure you are consistently profitable for those 2 weeks, and then bump it up another 25%. Again, stay there for the minimum of 2 weeks. Make sure you're still consistent. Bump it up another 25%. And eventually, you're going to get to a point where you don't feel comfortable in that position size. The risk is too high. And that's pay attention to your body. Your body will tell you, I feel nervous. I'm sweating. My leg is shaking. My heart's coming out of my chest. That means that risk is too high for you. Okay, so maybe you got all the way to 225, right? And your last tier was 175. Okay, when you get to 225, you feel shaky, go back to 175. Now stay there for the next, and then start the process over.
All right, so real quick, starting at 2,000, how long do I want to be consistently profitable, risking $50 to $75?
I would say 2 to 3 months.
All right, 90 days. How long do I want to be consistently profitable at 60 to 90 as my risk?
Well, but now here's what I'm saying. Now, once you start increasing your size, you want to stay there for a minimum of 2 weeks.
Okay, so now that so really the 50 to 75 is the base. That's the the first quarter of you as transitioning.
Right. Proving that you can be
Right.
consistent. And then once you prove you can
Would
be
it
consistent,
be safe to say that every time you blow up an account or have a big setback, that one should start over again at the 90 days?
yes. Yes, absolutely.
Okay.
Good
So
point.
if you make it all the way to like right here, 4,000, you're risking $75 to $100 a trade, and you blow up your account because you got emotional, you YOLO'd, you did whatever, and you're already 6 months into this, and you know, not because the trade didn't work out because of things that are outside of your control, but because you abandoned your rules, you abandoned the things that you were supposed to work on, then you would recommend to somebody that they go back and start at the beginning again.
Yes, absolutely. More importantly for that person, because you blow up your account now, you're psychologically, you're a head case. You got to start over.
Right. Okay. So, but after the 90 days,
now we start climbing the ladder.
Is it 2 to 3 weeks per period, or do you recommend, you know, the higher it gets, the longer the interval, the shorter the interval?
No, so here's the reason why. I'll explain the reason why. It's twofold on why I have people. So once you bump it up, stay there for a couple of weeks, make sure you're still profitable. You do this for two reasons. One is mental and one is actually physical. The physical part first. As you increase your position size and your risk, rather, as you can increase your risk, your winning trades are going to start to become bigger now too, just like your losing trades are going to start to become bigger. It's very important that you allow your new risk to realize some profitable trades with that higher number, because this builds a cushion. This builds a cushion for you as you increase your risk. What you don't want to end up happening is, let's say you risk $50 a trade and you're like, man, I'm killing it for 3 months. I'm going to start risking 200. What happens now, you jump to 200, you make 2 or 3 losing trades. You have just wiped out like 10, 12, 15 of your winning trades at 50. You have an air pocket in your P&L. Just a couple losses with that bigger position size wipes out 1 or 2 months of profit. You can't do that. You kill your account, you kill your confidence, you kill your mental state. You can't do that. You got to allow your P&L to catch up to what's going to be your bigger risk down the road. And that builds a cushion, and you can absorb a couple of losses without feeling like you just blew up your account. So that's number one. That's the physical reason why you want to stay there a couple of weeks and make sure that you're still profitable before you take the next leap. The other part is psychological. Going from $50 risk to $200 risk is a big difference. It's a big jump. You might be comfortable at 50. You might be a nervous wreck at 200. So when you climb the ladder in little baby steps, going from like 100 to 125, not a big difference, right? It's easy for you emotionally to go from 100 to 125, but it might be difficult to go from 100 to 300. So that's why you climb the ladder. Think of it this way. If you had to go up on your roof and you put a ladder on the side of your house, what's the safest way to get up that ladder? You're going to go one step at a time, right? None of you would start at the bottom and leapfrog up 5 or 6 levels and try to grab on and then leapfrog another 5 or 6 levels. Chances are, if you do that, you're going to fall off the ladder. The safest way to get to where you're trying to go is to go one step at a time. And that's the analogy that I like to use with members on why this is why when you increase your risk, this is how you do it.
But would you say that this chart that I've put together here is pretty accurate based upon the things that you're saying?
Now you can see the risk per trade can be larger than that at those points.
Show me where. At what point? What are we talking about?
I would say once you get to, let me see, if you're at 75, okay, no, that one's good. 10,000. I would say the 10,001 can be, 200 to 250.
How long do you stay at the 7,500 one? Is it all 2 to 3 weeks?
It's the same. Yeah. Listen, it's all because you're going to go until you can't any further. And how will you know when you're going to stop? You're going to stop when one of two things happen. You're not profitable for those 2 to 3 weeks, or you emotionally feel uncomfortable with this risk.
Got it. So how many weeks are in? So in 90 days, so there's 12 plus, right? 12 weeks is 90 days. And that works out perfect. Look at this. Ready? Watch this. Here's a beautiful thing. And then assuming this is all 3 weeks, right?
Mm-hmm.
So let's get rid of 2 to 3 weeks and just make it 3 weeks. This works out absolutely perfect. Oh, apparently not. Check this out.
No way. No way.
51 weeks.
That's crazy. No way.
So this right here is quite actually a literal roadmap to how you can. I mean, honestly, when you put it down on paper like this, it's really, this is a 1-year game plan of how you can go ahead and get to, $50,000 in a year, starting with a $2,000 balance. Now, obviously, this does not account if you get all the way to here and you decide to abandon everything that got you to right here.
Right.
Then you got to go back to the beginning.
Right. And guys, you're going to, and listen, you're going to encounter, and like I said, like that, those risk amounts per trade, can be larger as your account balance grows like that. You can definitely, once you
Show
get
me.
to,
Go ahead. Tell me which ones.
let me see. So you got 20. I would say the 20,000. I would say the 20,000 can now you can start to be, I don't know, at 20,000, man. I mean, now you're talking, you could be risking $400 to $500 a trade. At 25, I'd say you could be 500 to 600. At 30, 600 to 750. At 35, it could be 750 to 800. At 40K, you can do 800 to 1,000. At 45, you can do 1,000 to 1,100, and then at 50K or 1,000 to 1,200, I would say 1,000 to 1,200, and then for 45K, 1,000 to 1,200, and then for 50K, I'd say 1,200 to 1,500.
What would be an ideal win rate to try and maintain throughout this process? Because when you say maintain profitability, do you mean like how much do you want to be making per month? Because what if I'm putting up, if my account is 3,000 and I make $3,020 1 month, then technically I'm profitable, but I'm, that doesn't.
Right.
That doesn't
I mean, you're break even. That's break even,
All right. Let's say I made 3,500, right?
I would say
500?
your win rate, your win rate, you want your win rate to be in the 60s
Where?
everywhere.
Everywhere in the 60s? I mean, where, like, what do you want it to be
Like
like?
you shouldn't even be thinking about trading full time if your win rate is in the 40s or in the 50s.
Okay, so I'm asking. So 65?
I would just say over 60. I would just over 60. You want to be in the
Okay.
60s. In the 60s. You can just say greater than 60%.
There you go.
Yeah. And you guys have to realize, you will encounter, as you climb that ladder, you will encounter hurdles. You will encounter setbacks. You will
Right, but
encounter.
does a setback mean that you have to start over?
No. So so here, let me
Describe a time where you'd have to start over versus a time where it's a setback, but you don't need to go back to the beginning.
You only have to start over. I mean, if you really, blow yourself up.
Well, give it a real. I mean, we're putting real numbers down, so give me a real example.
If your 20K account goes down to 4, then yeah, you gotta start over.
What if it goes to 8?
Yeah, man.
What if your 20K account goes down to 12?
Adam, I can't. I mean,
I'm trying to understand. Without a clear, defined plan, it's hard for people to. I mean, you're dealing with numbers. There's not a lot of black and white. I'm sorry. There's not a lot of gray area with numbers. It's either it either is or it isn't. You tell everyone to stick to their trading plan, have hard stop losses, no matter what happens, stick to that plan. So that's why I'm pushing you on this, because and you don't have to give an answer for all of it, but I'm saying, as a general idea, I take $2,000, I turn it into $20,000 over the course of 6 months or whatever it is, right? Then I go back down from 20 to 12. At that point, I feel like I'm right on that line, teetering between go start over and big setback.
You don't have to start over at that point, but I would go back. I would reduce your size. I would go back to where you were at that level when you were at 12K. Where were you? Right, you weren't at $500 risk at 12K.
Would it make sense to even go further back? Go back to a $5,000 risk.
A step below, yeah, you can go down a step below to get yourself back on track.
Okay.
And again, guys, listen, let me make myself very, very clear. The numbers that you see on this screen are a very rough estimate.
Of course.
Okay, yeah. I want to make that crystal clear. From the 90 days and the 3 weeks and the risk per trade, these are very rough estimates just to give you an idea of how you should approach this. All right. Everyone's process will be different. You will have different accelerators. You'll have different setbacks. But, you want to look at like that 2 to 3% of your entire account risk per trade is a general number that you can stick with to help you. And what you'll do is once you start climbing the ladder, once you begin, right? Let's say you start with $50 risk, you work your way all the way up to 200. And then all of a sudden you just don't feel comfortable at 200. You're nervous in trades now. Your leg is shaking when you're in a trade, like your palms are sweaty. That's your body telling you that, hey, this is too much. $200 is too much. You're not comfortable with it. Listen to your body when you feel that way, and then drop down to the previous tier, which was 150, and that is your new risk. And now you start back at the 90-day mark. So now stay at 150 for the 90 days, or at least 60 days, until you're comfortable at 150, and then you'll start climbing the ladder again. Then you go from 150 to 200, stay there for 2 to 3 weeks, then bump it up to 250, stay there for 2 to 3 weeks. And then maybe this time you get all the way to 400 and you're like, ooh, I don't feel comfortable. I'm nervous in trades. Okay, then drop it back down to 300 or 350. Now stay there for 60 days. Get comfortable. You're still profitable. Start climbing that ladder again. Like, you're going to go through these stages of, you climb the ladder and then you're going to walk sideways. Then you're going to climb the ladder. Then you're going to walk sideways. And that's how you go about increasing your position size, increasing your risk, and getting comfortable emotionally and managing that new risk and managing that new size.
All right. So let's fast forward. We get to the end of the year. Okay. And again, this year could turn out to be 18 months. This year could turn out to be 24 months, right? Rome wasn't built in a day.
Right.
Whatever you're doing to make the $50,000 that you were making now.
And let me also add to this. We're not saying that you should be able to take an account from 2,000 to 50,000 in 1 year.
No.
Okay, that's not what and I really want to make this very clear with that spreadsheet that we just said, because it's not 3 weeks like consecutively. But that's not what we're trying to show you there, because you will have moments where you're going to pause and you're going to stay at this position size. You're going to have setbacks. Okay, that process, you're not going to go
right.
from 2K
that
to
spreadsheet is a general guideline.
That's not what we are saying.
Right. It is a general guideline. It is to show you what to aim for within a year. It does not mean that you will hit it within a year.
Right. And then, like, the time frames that you should be at certain risk levels and
none of this. Look, absolutely. I think everyone on here should know, and if you don't know, we'll tell you.
I don't know, because I saw one person was like, I just finished my 1 year, I'm behind. Like, because you're looking at
right. No.
My account's not at 50K. Your account, that's not what we're saying. That's why I'm saying, like, when we say 3 weeks, 3 weeks, 3 weeks, 3 weeks, you're not going to go you're not going to go to each new level every 3 weeks in reality.
Correct.
You're going to pause at certain areas.
Guys, do me a favor. Type the number 1 in chat if you're watching this and you fully understand that was a guideline and not a concrete plan that you should now base all of your trading around. Just go ahead and type the number 1 in chat if you understand that. Yeah, there we go. Cool. All right, just want to be very, very clear.
Yeah, I don't want to give false expectations.
No, they get it. They get it, and more so than they get it, we're talking about it. I think we're being transparent about it, and look, I think people on here appreciate seeing, even though it's a general guideline, seeing real, seeing potential for real numbers.
Yeah.
Because seeing those numbers may not be the numbers that they have to work with, or that they can work with, or should work with, or whatever, but they could take that and go back to their drawing board and make a plan for themselves based upon this type of thing.
Yeah.
I do think that it helps. Okay. Next question. I'm at the end of a year or 18 months or 2 years. I did it. I made what I usually make in a year. I now made this trading. It was tough. It was a lot of work and trading and home life balance, but I did it. How do I know that I am ready to let go of the safety net of that 9 to 5?
So I'll tell you now, the hardest part of your entire trading career will be when you decide to leave when you decide to leave your safety net. That will be the biggest psychological hurdle that you will have to overcome. I have seen traders absolutely crush it for 3 years, leave their job and struggle instantly. Now, is that because that person forgot how to trade? Did they get lucky for 3 years? No. It's because there's a very big difference between wanting to make money and needing to make money. A very big difference. You should make sure that you have set aside a year's worth of bills so that you don't feel like I need to make money right now, that if you don't make money in the first 2 weeks of the month, that you don't know how you're going to pay your rent or your car bill. You want to make sure that you have a year's worth of expenses just sitting there chilling, that you're like, hey, if this doesn't work out, if it takes me 1, 2, or 3 months to really get going, I have money set aside that I can pay my bills and not have to worry about, having a roof over my head or making sure that my family is fed. Because once you have your back up against the wall and you need to make money, the pressure that you put on yourself is immense. And trading is already a psychological battle within yourself. You don't want to add any other stresses, and you don't want to amplify any of the current stresses to that equation. It will make your trading more difficult. It will make your trading harder. So you want to do everything that you can to make sure that you don't feel the pressure of, if I don't make money this month, I'm screwed. And you also want to make sure before you do decide to go full time, I tell people you should be consistently profitable for like 1 to 3 years before you decide to leave and quit your job, because you want to make sure that you're profitable in various trading environments. Okay. The various trading environments is important because, as you saw in 2021, anybody could have made money. And if you were like, wow, look at all this money I made in AMC, look at all this money I made in Bitcoin, I'm a professional trader now, and then you lost everything in 2022 as the markets changed. You want to make sure that you can make money when stocks go up, when stocks go down, when stocks go sideways. So make sure that you're still profitable in various environments, because once you become a full-time trader, you better learn how to make money regardless of what the market's doing, because your mortgage doesn't care. Oh, well, the market was sideways this month. I'm sorry, JP Morgan, I can't pay my mortgage. They don't care. So that's why it's important for you to make sure you give yourself ample time so that you are prove to yourself you're profitable in various environments. It's important that you guys treat this like a business, not a casino, right? There's trading and there's trading as a business. And a lot of people sometimes treat trading like a casino, and you guys know one thing's for certain. Yeah. Can you win big in a casino? Sure. Right. Can you win big in a casino? Sure. But does that mean you can consistently make money? No. You treat the market like a casino, you'll get casino results. Treat it like a business, you'll get business results. Trading as a business requires a different mindset. It requires different focus. It requires a different thought process. It requires a lot of self-work. I think a lot of people will realize once they actually become a full-time trader, they learn new things about themselves that they didn't know before. And you really have to work on yourself from within. And you have to be very honest with yourself, because you don't have a boss telling you, hey, that's wrong. You can lie to yourself all you want. And that's where the mastermind program comes into play. This mastermind program is not, it's for people that want to start their own business and grow their business and run their business. And there's no one better to walk you through that process than Adam. But also when you're talking about becoming a full-time trader and treating trading like a business, that whole mindset, and that's the reason why I focus so much on trader psychology inside a True Trading Group. And TTG Mastermind is trader psychology on steroids. And it's really making sure that your mind is where it needs to be, and your thought process is where it needs to be in order for you to treat trading like a business, to give yourself the best chance to get to the goals that you've set forth for yourself. And then also, once you do become a profitable and successful trader, now it's all about diversifying, right? You don't have that 401k plan anymore. You don't have that pension, right? Or you're not working into the pension or your 401k anymore. You are your retirement. You need to set things up that will pay you for your retirement, like a 401k or a pension or Social Security or some of these other things. You need to create a dividend portfolio. You need to, invest into other businesses or start other businesses or buy real estate and all these other things and set yourself up for that. And that's really where mastermind comes into play. And that's the goal and the heart of TTG Mastermind. You know, and this is something that's separate from True Trading Group, guys. I want to make that very clear, right? The True Trading Group and TTG Mastermind are two separate programs.
Yeah. So the idea, and we'll wrap with this, guys. Do me a favor, if you got something out of this today, we have nothing to sell you. We have nothing to click on or sign up for. Just smash the like button and make sure you're subscribed, please. All right, smash the like button. Make sure you're subscribed. We're not telling you on anything here today. There's none of that. We just want you to smash the like button, subscribe, share the channel. When we're done, if you could leave comments, maybe list some of your favorite parts. That engagement really helps us a lot. You know, but TTG Mastermind was originally intended to be, it was not called Mastermind, but it was originally intended to be a part of True Trading Group. True Trading Group was going to be a community of traders and entrepreneurs. Come to find out that the traders and entrepreneurs side, when you're starting a business, is two completely different things initially and kind of complicated. So we kept it simple, focused on the trading part, but the ultimate plan for us as a business in True Trading Group is to have offshoots of what got us here.
Right.
And what got us to the success that we have with True Trading Group is being available to our community, putting people first, giving quality value for things that people pay for, right? This is extremely important. That is the right way to build a business. It takes longer, but that is the right way to build it. Everything that we did to build True Trading Group into what it is now will be done to build out TTG Mastermind. That is what will take place. That is what is taking place. Whether you want to become a full-time trader or open a business or try and find what it is that you want to do because you know you're just not where you want to be, that's what TTG Mastermind is for. So, and this is just the beginning. Year down the road, we will have something in real estate. We'll have to find someone in real estate because Mike and I aren't real. I know nothing about real estate. I found my house on Zillow, right? So don't listen to me about real estate. You know, we eventually want to have a community on parenting.
Yeah.
Health and fitness, all sorts of things. We want to have many different communities that all provide the same incredible value and sense of family and camaraderie with what got us where we are now with True Trading Group. I really, really, really am so grateful for the support. This is something I've always wanted to do. We're getting to do it now. I want to give a special shout out. We had 64 TTG Foundation members. We cut it off at 64. We had 64 of them that signed up between December and January January of this year. You guys believing in what it is that we're doing,
yeah, man,
taking that step means the entire world to Mike and myself. I want you to know it's not something we take lightly, nor will we ever.
Yeah.
So we love you guys. This is the first one. I have no idea what the schedule is. But I know who the next guest is, right? The next guest is going to be the head of Benzinga. How
these guys started in a dorm room and sold their company for $300 million.
Yep. This live stream will be available on this YouTube channel. I hope you got something out of this. Love you guys. We're going to go home.
I'm already
home. Thank you so much for being here. All right. Take care. Thanks,
guys. Take care. Have a great night.